Afghanistan either. Taiwan sending an unofficial delegation to Taiwan and trying to get allies on side and on board to do the same thing. Jack, what is going on there?
Well, you have heard pushback from Chinese officials saying, this is not helpful for the U.S.'s relationship with China. At the same time, you do have John Kerry headed to Shanghai to talk about climate. So it's not as if this individual circumstance has blown up the relationship. That's an area where, yes, this has flown under the radar a little bit. There hasn't been that much reaction in Congress, elsewhere in Washington, as to what we're seeing with Taiwan. But that is an important development.
Jack, issues in Iran as well, issues in Russia. The president tried to meet maybe the Russian president too. How do you keep up at the moment, Jack, and where's the emphasis?
I think that's one of the reasons why Biden actually has been able to do what he wants without a massive amount of pushback on foreign policy, even though that will be coming. There is a fight over defense spending and what's happened with his plans in Afghanistan. But, even among critics, I asked Barbara Lee, who's one of the more progressive vocal critics of establishment democratic politics and foreign policy, what the stance should be on Russia with the troops gathering on Ukraine. Not a lot of proactive pushback from Biden's skeptics right now. There are so many things they're allowing him to juggle, and they'll fight with him later on. But he's more or less being given free rein on a lot of foreign policy decisions.
Jack, you said that President Biden is unique and that he didn't lay out a full map of what he wanted to do. He may do that on April 28th. He's addressing joint Congress for the first time just as he nears his 100-day mark. What is he going to focus on, given all of the issues that we've talked about? Pandemic, we've been talking about infrastructure, foreign policy.
So the description from Nancy Pelosi framed this sort of as coming out of the pandemic. I think there will be a really significant focus on what they did with the stimulus, and clearly they will still be working on this next big infrastructure, jobs, economic plan. They'll have a lot of work left to do on that as of April 28th. So it sounds like there's going to be a really significant focus on the near-term legislative agenda relating to the economy coming out of the pandemic.
Jack, really good to catch up early in the morning down in D.C. Jack Fitzpatrick of Bloomberg Government, and that really was the story of yesterday. Early in the morning, all about vaccinations. And then just as far as the outlook for vaccinations is concerned, I think the nervousness that there might have been around 7 a.m. Eastern yesterday was put to one side, Tom. And then it became about foreign policy really quickly on several fronts, and not just Afghanistan.
It's a very organized White House. I mean, it's very different than the previous tenant. And you're getting this, John. We're getting used to these shifts of 3 and 4 stories a day out of Washington. But again, John, the symbolism here, and frankly for the United Kingdom as well, and for Russia before us, of the endless, never-ending battles of Afghanistan is tangible. And, you see it in the reach of 20 years on from September 11th.
Yeah, Afghanistan, one issue. Iran, Taiwan, Russia.
I'm glad you went to Taiwan there. We didn't do that enough yesterday.
John, I thought of you when I was reading a story this morning about how China is actually lobbying specific companies in the U.S. to get relationships with them, not the government. And it sort of goes to this idea of possibly getting a more favorable kind of audience than perhaps the Biden administration, which looks a lot like the Trump administration when it comes to China policy.
I love the idea that Lisa read an article this morning and thought of me, but it was about China and lobbying companies here in the United States. And that's about it. That's the only time anyone ever thinks of me.
I read an article about AC Milan and thought of you.
Did you? Thanks, Tom. I appreciate that too.
Thank you. They're as bad as they were last year.
We'll be talking about the banks very shortly. We'll do that with Ken
Leo.
Leo.
It's earnings day. Yes, let's focus on the banks.
CFRA Global Director of Equity Research will be joining us a little bit later.
Very good.
This show.
We got a great lineup on
Wednesday.
earnings.
It's Wednesday.
Jamie's watching. Be nice, John. Mr. Diamond's watching.
I'm being nice. I'm being nice to everyone. I'm trying.
You're trying.
Doing yoga and meditation in the commercial breaks.
I like the image at the top. On radio, it was stunning to see the Pharaoh image up top.
Yeah, okay. Equity futures up a tenth on the S&P. Yields higher by a couple of basis points. 163.23
Would someone say transitory?
From New York City, this is Bloomberg.
Hello. Welcome Today we have the dollar Swiss franc here, the dollar Japanese yen here, the gold here, and the gas here, the natural gas. These two are still from 2 weeks ago. As you can see here, the dollar Swiss franc is in the downtrend. As we said the last 2 weeks, we place another sell here. We still have the sell order here. We are waiting to hit this level and to close this trade. If not, if it goes here around this level, we will close all trades here on this level here. Okay, the dollar Japanese yen, the dollar yen, also we have a sell order here, and we have, as you can see here, another one. For this one, we expect to hit at least this level, and if it breaks this level, it will go down. When it will be around this area, we will close all the trades. As you can see, we have a sell order here and a sell order here. This order is from 2 weeks ago. On the gold here, if it goes at this level again, we will place a sell order here. If not, we will wait for this level to place a buy order here. This level and this level. Here will be the sell, here it will be the buy. If it will break this level, we will place a sell order expecting to go around here. This is a very strong support level here on 160.80. On the gas here, as we said 2 weeks ago, we place a buy order on 2.5 here, and we expect to reach 2.66 here, 2.68, 2.66 here. If the gas will not break this level, we will close the trade, and maybe we will place here a sell order. Okay. As you can see, the gold here is dropping. Let's see. Okay. Stay with us. We will come with further updates as the stream goes by.
City for our audience worldwide. This is Bloomberg Surveillance Live on Bloomberg Television alongside Tom Keane, Lisa Bravitz. I'm Jonathan Ferro. Here's the price action going into earnings season. JP Morgan in 15 minutes time. S&P 500 futures up about 0.1%. The Russell up about 0.15%. The Russell to small caps down for 2 straight sessions. The Nasdaq has been outperforming. The Nasdaq yesterday absolutely flying off the lows of early March, now up by almost 14 percentage points, Tom. And that's been the story. The underperformance of small caps versus big cap tech and a stalling of the cyclical rally. So what does it mean for the big banks? Switch up the board and let's take a look at this. Right now, going into earnings season, JP Morgan year to date up 21%. Nice. Bank of America up 30%. Wells Fargo up 32%. Tom, these have been huge, huge gains. Off the back of what? Let's get to the bond market. 2s, 10s, 30s. Yields have just been inching higher through the year, but this has been stalling too. This one stalled out at the end of March. 174 on 10s as a closing high. 163.23 right now, yields higher by a couple of basis points. And I think this is the question. As you look cross-asset and start thinking about that cyclical trade, Tom, how much steam is left? And have we run out of steam? We saw that in copper, crude, small caps. Are we going to see it in banks too?
The linkages, John, I think are apt. I think it's really important to bring commodities into the story as well. And of course, it's something we'll address here into April and into May as well. We are thrilled to start strong in the earnings season with Gina Martin Adams. We're monitoring JP Morgan earnings. Our top live people just went live seconds ago. They'll be telling Global Wall Street all the nuances on the three banks today. But we start strong with Gina Martin Adams running all of our chief equity shop at Bloomberg Intelligence. And I want to go right to the Whisper chat that's out there. We were making jokes about Whisper Go and all this stuff. What is the Whisper number now on earnings? Give us the backstory.
Yeah, I think the Whisper number is actually closer to 30% on EPS growth.
Where's the real number? It's like 20 something?
Yeah, no, the real number actually could be closer to 35. I mean, frankly, I think what we've had over the last several quarters is a real struggle to catch up with the rate of improvement in economic data, the rate of improvement in inflation indicators.
Right.
Everything we follow would suggest every bit of inflation is being passed through and then some. The dollar's been relatively benign, so there's not a tremendous amount of short-term risk. I think what we're starting to watch are the longer-term indicators, in particular margins. The most important thing to watch is margins into 2022 because the analyst consensus thinks we're going to get new peak margins by the middle of 2022.
Right. So what's so important here is revenue is a unit dynamic and a price dynamic. And the moment you come under that, it's a blended margin. Where on the income statement is Bloomberg Intelligence focus on margins?
Well, I think there's a couple of things. You've got to look at cost input. Right. So you just look at the gross margin line. How much are you actually experiencing in terms of pass through? And then I think you want to watch wages, frankly. Nobody's talking about this, but the fact that the employment market has improved to levels that took 4.5 years for us to get to following the great financial crisis has kind of gone unnoticed. I think we're going to start to see a little bit of wage pressure. I think there are some degree of labor shortages out there. Companies are struggling to find new employees as they move forward. They're probably going to have to increase wages. And then the big bazooka is what happens with tax. We all know we've got this big fiscal package out there. The proposal for fiscal package, it will likely be paid for by an accelerated increase or an increase in taxation of corporates. What does that do to the margin outlook? Because no analyst has that in their forecast. So I think there are a lot of lines to look for, frankly, and it could be a relatively volatile inflation outlook into 2022, and we're not really anticipating that in the numbers.
Gina, I'd love for you to talk about CapEx in just a moment, but let's just sit there on taxes. Is it as simple as going back to the homework we all did back in 2017 and just reverse engineering it?
It's not for a lot of reasons. For the biggest reason it's not is because we're not going back to a 35% statutory rate, right? At that point, we were at a 35% statutory rate. We went to a 21% statutory rate. We're likely to go to something around a 28% statutory rate, which puts us at an effective rate of somewhere between 24 and 25%. But there is also a lot of nuance because many of the tax proposals are directly geared toward attacking that multinational revenue source, so the capital that's constantly trapped overseas at very, very low tax rates. There are a lot of efforts underway in Washington to try to get at that figure, which may mean our effective rate is a little bit higher than 24, 25%. That gap between the statutory or sort of proposed rate and the effective rate that corporations pay could continue to close quite a bit as a result of what we see with fiscal policy and tax reform going forward. And
that right there, Gina, is why so many people are finding it so difficult right now to make a call on what the future looks like. I want to turn to CapEx if we can. We touched on this earlier in the hour. The fund manager survey from Bank of America revealing something quite interesting. These investors don't want buybacks, they want CapEx.
Yeah.
What are your thoughts on that?
Yeah, we think there's a room for capital deployment of all stripes, frankly, over the course of this year. CapEx relative to sales, dividends relative to sales, buybacks relative to sales. All of them got completely slashed over the course of 2020 and are at multi-year lows. As revenue recovers, we think we're going to get somewhere between 7 and 8% revenue recovery in the first quarter alone, only to accelerate over the course of 2021. We should see some recovery in all forms of capital deployment. We should see capital spending start to come back. I think the big question mark is where does that capital spending get concentrated? Because in the past, much of the capital spending has gone overseas to sort of boost supply chains, production chains in overseas economies. Will a lot of that CapEx come into the United United States as we sort of shift our supply chains for a post-pandemic world is a big question mark that everyone has. How much of it will go to tech versus non-tech as well? How much of it is true industrial long-term sort of investment as opposed to shorter-term productivity-enhancing technology investment? Those are also big questions that we need to ask ourselves.
There was something else that you mentioned, Gina. You talked about the idea of wage increases being a risk that a lot of people weren't thinking about. And we have heard about labor market shortages, particularly in service industries, trying to reignite after the pandemic. What are you expecting to hear on that front? At what point does it become, for better or worse, a tail risk for the equity valuations, if perhaps a tailwind for the economy?
It's difficult to say because for 20 years now, it hasn't been a tail risk. And I say that, you know, with all due respect, it's very difficult to time any sort of wage-induced pressure on margins, because what we've experienced for the bulk of the last couple of decades, maybe even closer to 3 decades, is a period of time where wages only followed revenue growth. So we actually haven't experienced a point in time where wages have been so profoundly strong that it's created pressure on corporate margins. Instead, corporates have been able to navigate the scenario of accelerating demand first to slowly add to labor force and add to wage. And the result is just ever increases in operating margins. The operating margin peaks have actually occurred as a result of changes in interest rates. So if we're going into a new regime where we have some inflation pressure, we have some wage pressure, this is another case where analysts are really going to struggle to model this kind of environment because it hasn't existed for much of the last several decades. But we could be at that point now because we've also never seen double-digit GDP growth. We've not seen a sort of rate of recovery in revenue growth like we're expecting over the course of the next year. This is natural as a matter of the fact that we also had never seen a pandemic-related shutdown in modern financial market history. So there are a lot of unknowns. I think the earnings stream is currently very, very strong. But by the second half of this year, I think we're going to be really struggling to navigate where we're headed into 2022.
And that's why, Gina, people are looking so much at the banks and sort of their guidance in the quarters ahead. Going into this, in that Bank of America survey that John was talking about, fund managers indicated that they were the most overweight banks going back to 2018. From a positioning perspective, is this sector priced to perfection?
Yeah, I doubt it. And I doubt that because even back in 2018, investors were perilously low in their relative weighting to financials in comparison to other sectors. I mean, if you think about where we were in 2018, they certainly were starting to inch their way into financials, but we've been through a decade in which investors have generally shunned financials in favor of other cyclical sectors, and in particular in favor of larger cap growth stocks in the S&P 500. So I strongly doubt that we're over allocated to financials just by comparing to the last couple of years. You'd have to compare to something like 2007. The 2005 to 2007 period is a better proxy for when investors were actually overweight financials, or irrationally bullish about the outlook for housing markets, irrationally bullish about the outlook for financials to constantly print money. That's the kind of environment that you would get into to suggest that we're too overweight. Now, in the short term, do we get overbought? Absolutely. But at the same time, we also started to break out above key long-term secular resistance levels. I mean, we just over the last couple of months broke above that 2007 peak on financials performance, which could be a key indicator of strength yet to come as opposed to weakness.
Gina, you own the high ground on saying you got to be in the market. All cash is just someplace you're not comfortable being. I want you to talk to people that miss JP Morgan at 0.8 times book value, and they're missing JP Morgan this morning at 1.88 times book value. How do I buy my first share of JP Morgan after Diamond hangs up on the conference call?
I think you buy your first shares in financials by thinking about the long term.
You got to go out and think, okay, but the new terminal value, because of everything going on, the new terminal value is in 3 years. You got to start looking at 5-year terminal value.
You do, and you have to start thinking about it in relative terms. I mean, if you think about financials, price-to-book ratios in relative terms to the rest of the S&P 500, you're still sitting at very, very low levels, more than a standard deviation below long-term average discounts for financials relative to the S&P when you think about it on book value.
But we're extending our timeline out is really whether it's Amazon or banking, that's what we're doing.
I think you have to some degree. You have to think about the longer-term growth prospects. Okay. You also have to think about the cycle.
Right.
I mean, we're in double-digit growth right now. Where are we going to be in 2022, 2023?
Okay. We got to go. John just put in his buy on Coinbase after they trade this morning, so we got to get back to Faro.
Fair.
Gina, thank you. Don't take anything he says seriously this morning, whatever you do. Gina Martin Adams, Bloomberg Intelligence.
That was a transitory conversation.
I wasn't even talking to Gina then. I was talking to our audience worldwide, beyond just Gina. In about 4 minutes' time, we get earnings from JP Morgan. Looking forward to that. Earnings after a stock pop of a little more than 20% so far year to date. Right now in early trading, up about 0.1%. The number's just around the corner. Alongside Tom Keene, Lisa Bramvitz, I'm Jonathan Ferro, taking another deep breath. In your equity market right now, up 4 points on the S&P 500. We advance a little less than 0.1%. In the bond market, yields are higher by about a basis point to 162.88. Crude doing okay, 61 handle on WTI, $61.15, up by 1.6%. Euro dollar 119.61. Euro dollar up about 0.1%. That's a stronger euro. Up next, it's earnings season, and it kicks off with Jamie Dimon's JP Morgan from New York City. This is Bloomberg Surveillance.
With the first word news, I'm Rishika Gupta. Egypt has seized the giant container ship that blocked the Suez Canal last month. Egyptian authorities are seeking more than $900 million in compensation. The ship's insurer for third-party losses, the UK and P&I Club, says the claim for damages is largely unsupported. The pause in the rollout of Johnson & Johnson's coronavirus vaccine marks another setback for the world's inoculation campaign, and it's happening just as vaccinations were picking up in Europe and other regions where there have been delays. The drug maker suspended shots in Europe after U.S. officials urged a pause to review rare cases of deadly brain clots. The U.S. Chamber of Commerce is urging senators to reject a Democratic-backed voting rights bill. The powerful business lobby says the measure would impose restrictions on advocating for and against candidates. The House passed the measure, but it's unlikely to get the 60 votes needed in the Senate because most Republicans oppose it. And another record for Bitcoin, the world's largest cryptocurrency, broke that $64,000 threshold for the first time. The mood in digital currencies has turned bullish ahead of Coinbase's listing on the NASDAQ today. The cryptocurrency exchange is likely to have a valuation of around $100 billion. Bloomberg's learned that Credit Suisse has sold about $2 billion of stocks tied to the implosion of Archegos Capital Management. Banks from New York to Zurich have been unwinding leveraged equity bets by Archegos. Last month, the firm became the center of one of the biggest margin calls of all time. It will cost Credit Suisse and other banks about $10 billion in losses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe and give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
$1 billion. You will hear a lot this morning about reserve release. The first quarter includes $5.2 billion of credit reserve releases firm-wide. We'll touch on that a little bit more in just a moment. First quarter investment banking revenue, $2.85 billion. The estimate, $2.46 billion. They crushed that one. Jamie Dimon saying credit reserves at $26 billion are, quote, appropriate. They are prudent. So the numbers across the board right now, Tom, so far, from what I'm seeing, so good.
Well, they're so good. I mean, it's just simple. Return on equity at 23%, just as one of the first numbers I'm looking at. We look at different ideas like the capital ratio of a 13% plus. Let's get clear. This is industry-leading numbers, and you see it with the lift in futures as well. I think, John, the scope and scale of selected numbers as I dive into it. How about assets under management, John? Up 28%. I'm not even sure how to digest that number.
The stock right now down by about 0.4%, 153.50 on JP Morgan. Jamie Dimon saying consumer spending returned to the pre-pandemic level. That is quite a headline, isn't it? From the CEO of JP Morgan, Lisa. The consumer spending has returned to the pre-pandemic level.
Yeah, it just talks about this V shape that we've gotten, and perhaps even beyond that, given how much money people have in their savings accounts. Interesting, though, that the shares are lower. How much of this is priced in? And I think that's going to be the key question. JP Morgan being the fortress here and indicating, I mean, just smashing expectations, John, and yet shares lower in pre-trading.
Much of this anticipated for the first quarter is going to be about the outlook, Tom, and as you indicated, these calls, there will be a lot of questions. The buzzy topic at the moment, I know it's Archegos, but going forward from here, does loan growth return in a big way? We know deposits have built up in a massive way in the last 12 months. Does the loan growth return as well?
The loan growth was returning, and on the big banks, maybe less than the super regionals and such, but then you fold in maybe the mystery of SPACs, equity underwriting and such. Let me go to the fortress principles as JP Morgan puts us out under the Diamond node. Book value up 10%, tangible book value up 10%. The Basel III Tier 1, I'm seeing a 13% statistic there as well. Ken Leon joins us from CFRA, who's had a first look at the data as it comes out. Ken, I want to go immediately to use of cash, and that they did a 4.3 billion share repurchase coming out of this pandemic. What do these banks and what does Mr. Dimon do with the reality of all that cash?
So it's return of capital. Jamie Dimon has said that we're overcapitalized. The Fed last month said by July, they'll be able to increase their dividend and also buybacks. That would be a big change since the last 12 months. So the return of capital is a big theme for being an investor in banks.
Ken, right now, the headline coming from the CEO, Jamie Dimon of JP Morgan, loan demand remains challenged. That's the issue right now, Ken. Do you see that persisting through the early part of this year into the middle?
It's incredibly important because loan volumes are and loan balances, both for consumer and for commercial, is going to drive the delta for performance.
very coordinated moves against tech giants.
Yeah, it was a very interesting week. You saw this flurry of actions beginning on Saturday with the fine levied against Alibaba, and then it was capped with this meeting that you referred to with 34 companies being summoned to Beijing by the regulators and told that they need to fix their anti-competitive behaviors within the next month, or they're going to face consequences. And these were some of the biggest tech companies in China. It included ByteDance and Tencent. And as you say, they were saying you need to heed the example that we've set with Alibaba. The regulators are concerned about a few different kinds of anti-competitive behavior, including forced exclusivity. So in the case of Alibaba in the e-commerce business, in some cases they may pressure merchants to be only on their e-commerce platform and not on anybody else's. That has sort of kept out competitors that are trying to compete with Alibaba, and in other cases, some of these other firms too. They're also concerned about some of the acquisitions that have happened where the powerful companies have maintained their power by either taking stakes in smaller companies or even buying other companies. So it's a pretty broad range of measures.
Peter, how does it fit within the broader China crackdown on tech, and what is it that Beijing wants ultimately?
Well, they've moved very quickly. They began the antitrust investigation into Jack Ma's empire, Alibaba, and the financial arm last year, and they've already come to the end of the antitrust investigation. First, with this antitrust fine against Alibaba of $2.8 billion, and then they are pushing into a holding company that's going to be regulated by the central bank. And the idea is to curb some of these anti-competitive behaviors, and the target seems to be to allow smaller companies to compete in some of these areas that have been dominated by the giants. Alibaba and Tencent have had tremendous sway over the tech industry in particular, partly because they dominate the two biggest businesses in the technology sector, and then also because they've essentially become the venture capitalists for most of the startups. So there's sort of these two different spheres that are dominated by the leading players. There's not a whole lot of room for competitors to come in, and Beijing wants to change that.
Good morning. It's 9 a.m. in Beijing, Shanghai, and here in Hong Kong. Welcome to Bloomberg Markets China Open. I'm David Iglesias, counting down to the open. The cash market open, Chinese mainland, and here in Hong Kong. Let's get to your top stories today. The top internet companies in China remain on notice even after Alibaba's record fine. Beijing is, continuing cracking down, could mark the end of a golden age for the country's tech sector. China Huarong's plunging bond prices highlight a major market shift. Investors can no longer count on the government to bail out state-run firms when they get into trouble. And U.S. climate envoy John Kerry will be landing in Shanghai today to discuss efforts to curb carbon emissions. It's the first visit to China by a senior member of the Biden White House. Right, here we go, just half an hour away. As we approach the open, a lot of themes that we're tracking here today. Huarong first, top, of course, of mind. Contagion efforts there. You also have this tech story, which we'll get to in just a couple of seconds here. We are in the midst, as you can see here, somewhat of a divergence really between ex-Asia DM and Asia EM equities. Low turnover, obviously, price is very much in focus when you look at what's happening over on the CSI 300. Have a look at these markets opening up right now. It is that time of the year. GDP's out of Singapore, also monetary policy. It is that time of the year when most in the financial journalism community pretend to understand monetary policy in Singapore. I'm kidding, but you know who you are. All right, let's change things up and have a look at the currency market. Yeah, there we go. TD Securities now says the U.S. is likely to name Taiwan and Thailand as FX manipulators. And just very quickly, have a look at your 10s and also your 30s here. Very strong auction overnight. In the U.S., we've seen somewhat of a rally, of course, in bond markets recently. China's included. Yields on the 10-year in China now lowest level here since January. And, of course, Bitcoin prices. There we go. Record high, 64,000 there on the price of cryptocurrency. Right. As I alluded to here, our top story today, so we're looking at tech in China. So Chinese regulators have...
Okay, guys. As you can see, the dollar Swiss franc here is testing this zone. The gold here, the gold is moving sideways between 1740 and 1740, 1750. It's moving sideways on this area. As I said, if it goes this level again, I will place a sell order. If it will break this level, I will place another sell order. Here, and I expect to hit this level. On the gas, as you can see, it's in the uptrend. This trade will stay at least a week. And here, the dollar yen, it's in a downtrend always. Is here, let me show you. Here also, here, as you can see. I expect to hit this level, and if the dollar yen could not break this level here, I will close all the trades. This one, and also I show you this one here. Okay, that's it for this week. See you next week. Have a nice day. Bye-bye.
China, and with that we've seen other government arms also working in coordination, looking at everything from antitrust practices and also information gathering, data gathering. So it is quite a coordinated effort from a very high level on the government's part in scrutinizing its one of its